For the first couple of years I traded, I was honestly lost. One day I'd win, the next day I'd give it all back to the markets. There was simply no consistency, not even any clarity. I kept switching strategies, chasing indicators, and hoping that something would finally stick. But then I came across a setup that wasn't complicated, but completely shifted how I viewed the market. It was rooted in ICT principles, specifically liquidity grabs and market structure shifts. The market traps retail at key levels, displaces in the other direction, and gives you a clean entry. Now, if you're patient enough to wait for it, it will truly bless you. And once I started using this setup, I finally had a process. A step-by-step model I could repeat no matter the pair, no matter the session. Now this is the exact setup that is a part of my key foundation, which I trade every single day. And it is making me over $150,000 a month using simple, high probability execution. So in this video, I'm going to show you exactly how it works, what to look for, when not to touch it, and 2 real examples from my own trades. Now if your trading feels random, emotional, or exhausting, this might be the thing you've been missing in your trading. So let's dive straight into it. So it's really simple and it's not overly complicated, but I'll just walk you guys through it. So the way it works is that you only want to use this strategy with buys. And you want to use the 10-minute time frame only. So buys and the 10-minute time frame. So once we have the general information down, buys, 10-minute time frame, what we want to look for, we want to look for a 10-minute order block. We want to be able to identify the 3-step model that includes liquidity. So 3-step model, liquidity, that would also be a MSS and rejection of the low. So once we're able to identify the 3-step model, we're basically good to go. And again, if you want to surpass and manage your funded challenge and get your payout guarantee, just click the first link in the description. We can show you how we've helped hundreds of traders do the exact same thing and they didn't pay a single penny until they got a payout. But let's get back into this. So it's really simple. So as you can see right here, boom, we just come to our trading time. Once we're within our trading time, first things first, we want to identify the 3-step model. So the 3-step model could look a little bit like this. Boom, 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 boom. Okay, so let's say the market looks like this. Now you may not understand what's going on, but you can see first things first, we identify the liquidity sweep. So we just mark that out with a $sign because it just indicates liquidity, because liquidity is money. Then we want to identify a market structure shift. As you can see, we have the market structure shift right here. And then for the 3rd step, we can identify the rejection of the low, which is the most beneficial step. As you can see, rejection of the low right here, as you can see. So cool. So now once you have all of that, you're going to look for the 10-minute order block, which can be somewhere along this range right here. Boom. So once we pull into the 10-minute order block, we're going to look to enter our position. We can enter from right here. We can put our stop loss just below this low right here. And what you want to always do is target a 1 to 2R. Now, you don't have to stick to 1 to 2R, but in my opinion, it works best. What you can also do, let's say price is soaring at these heights, okay? Let's say it's soaring at these crazy heights, okay? So what you can actually do, so once price is actually at those heights, you can mark out some liquidity points where you can actually target, or some imbalances you can wait to be filled. And this is the only way I say you should be targeting more than 1 to 2R. So if there's an imbalance, there's some liquidity points that needs to be filled, then you can target more than 1 to 2R, which is maybe 1 to 3, 1 to 4. But if there's no liquidity points or imbalances that needs to be filled, then you don't need to target more than 1 to 2R. So let's waste no time and let's get straight into this video example. So as you can see, we come down here to our trading time. So right now we're on a 10-minute time frame, and let's see what price holds for us. So we won't do absolutely anything. If price wants to go up, it can go up. If it wants to go down, it can most definitely go down. But we're gonna look to get a trade in. 1 second. Okay, boom, perfect, fixed. So as you can see, we have price doing its own thing. So what you want to do now is you want to be able to identify an entry point. So let's say we have a liquidity sweep right here. We could say price took out this liquidity point right here. What we can actually do now is we can mark out the area where we can enter from. So here's a 10-minute order block. You can see it follows all the rules. It did take this high right here, and we also have the rejection of this low. So it's following all the rules, and it seems to be a good area to enter from. So what we'll do, we'll enter a long position right here. Like I told you guys, a minimum of a 5 pip stop loss at minimum. But as you can see right now, we have a 8.3 pip stop loss. So what we could do is target 1 to 2 R to that. As you can see, there's liquidity points up here towards the upside, which we can actually target. There's imbalances that can be filled right here. And as you can see, this imbalance is actually less than what we're targeting. So we can expect price to actually soar to 1 to 2 R. As you can see right there, it did exactly that, and it filled the imbalance completely. Does it go to the next liquidity point? Let's have a look. No. So we actually had a reversal at the imbalance, which is extremely good. And this is a good way to increase your probability and your win rate on your trades. And again, if you want us to get you a payout guarantee and you don't pay a single penny until you do get that payout, click the first link in the description and we'll help you do exactly that. So we come to our second trade, which is right about here. So again, we don't do anything, but we just want to make sense of everything first before we actually look to enter a trade. So you can see we had the run on liquidity right over here. Really simple. Then we had the take of the high over here. So once we took this high, now we're going to look for the rejection of the low. And as you can see, the rejection of the low is right here. So what we could do, just mark that out. Boom. So once we mark that out, we have the 10-minute order block. We're going to go long position. We could put our stop loss at the low. It's quite a big stop loss, so let's aim for this wicked candle right here. We're going to target an easy 1 to 2 R, because 1 to 2 R is consistency, and that's what we mostly target. So we're going to look for liquidity points that can increase the probability. So price needs to hit this liquidity point. It needs to take out this liquidity point. And let's see if there's any more liquidity points. So there's a liquidity point resting right about here. So price should be able to make it to 1 to 2 R before reversal. And as you can see, it does exactly that. It goes way beyond the liquidity points we predicted. It even took out this high right here on Tuesday. So as you can see, it took out Tuesday's high. And yeah. So if you guys did enjoy this video, don't forget to like, comment, subscribe, and I'll see you guys in the next one.